Good morning. Hey
Good
there.
morning. Thank you for
so
being here.
Much. Good to be here.
Oh, and I should have said also a super sharp dresser. He made me up my game. I'm like, I can't wear my sneakers on stage today, which is good. I mean, and the last thing I would say is Mr. Positivity. You cannot spend 2 minutes with Rodney and not, feel better about yourself, have a smile, just has a super positive outlook. So thank you for coming and spending some time with us today.
Thank you for having me here, Aubrey. And also, I'd be remiss if I didn't thank the wonderful folks from RevTech. You all, this has been delightful for me to return to my hometown to see the role that FinTech is playing here, not just in Charlotte, but throughout North Carolina and throughout the country. So to have started my career here nearly 30 years ago, at the time it was called NCMB, then it morphed into Nations Bank, and then it became Bank of America. But my underpinnings in all of financial services came from here in Charlotte. So to see how things have progressed has been wonderful to see, Aubrey. I know you played a part in that success too in your work.
A small part. So one of the things is, listen, I think you are the first time we've had a regulator on stage, not one from the credit unions, just the first time we've ever had sort of a regulator. We have had sort of some of the other, like the CFPB, they did one of their sort of open door days here. So tell us a little bit about what it's like and what you're trying to do leading the NCUA, and why do you feel like it's important to kind of come and talk at an event like this about FinTech?
What? You've given me a number of responses that I can sort of share with you. So why don't I do a number of things. First, what are credit unions and who are they and how do they relate in today's environment? Ladies and gentlemen, credit unions grew into the American society about 100 years ago following the Great Depression. You all may recall that following the Depression, it was very dark in society for the most part, and that means that a lot of folks who needed access to affordable financial services could not get Main Street financing. And who are these folks I'm referring to? I'm talking about the automobile workers, the plant workers. In North Carolina, those have been the textile workers. They had great difficulty getting the loans for cars and homes and things of that nature. So what did they do? Rather than lament the fact that they couldn't go to Main Street, they galvanized, they reached into their pockets, and they took what little funds they had, and they started lending to each other, which is what they've done through the cooperative lending structure. So that is why today's credit union system is really looking at serving underserved people of modest means, because its history, again, dating back some 100 years ago, was helping people who could not access affordable services. So to date, we have credit unions that are now all over the United States, still tethered to that philosophy of people helping people. In my job at the NCUA, that's the National Credit Union Administration, look at us as the FDIC for credit unions. So what's the state of the credit union system today? We have credit unions that now serve 135 million members throughout the United States. There are 4,800 of those institutions. We're very fortunate to have some of the largest of those credit unions located here in North Carolina. One such as State Employees Credit Union, Truliant. I just yesterday met with Skyla, which used to be Charlotte Metro. The credit unions are also making a lot of loans. So I am proud of that 135 million members. And for you all as FinTechs, I know Aubrey and I are going to talk in a bit, I think you all need to bear in mind that that means that if you're partnering with credit unions in your endeavors, you're going to have access to roughly a third of the American economy. You're going to have a third of the American population. So that certainly does help you build well with scaling your products and really getting the product out the door. So that's something we can talk about a little later. But the credit union assets to date approximate $2.2 trillion. Loans outstanding are about $1.7 trillion. I'm really proud of the fact that our loans are now being made to those hardworking people who need car loans to go to and from work, mortgages to have sustainable home ownership for their families, and most notably, loans to those entrepreneurs like many of you who need those loans to make and create viable-based businesses. So I applaud the fact that credit unions are serving their members. And by the way, you all, I know you've heard a lot about headwinds in the American economy, whether it be geopolitical risk with Russia and Ukraine, whether it be inflationary pressures higher than what we've seen in the last 40 years, and also given some of the still intractable issues that we saw play out following the murder of George Floyd. We've seen a number of headwinds play out, and Silicon Valley Bank notwithstanding. In spite of the Silicon Valley Bank debacle, I want you all to know that we've seen little to no contagion within our credit union system. They are operating on all cylinders. All of those 135 million members of credit unions I've just referenced, their funds are fully insured by our agency. We serve as regulator and insurer, and no one, and I dare say no one, has ever lost a penny of an NCUA insured account. So while you hear a lot of numbers out there about other institutions that are not doing as well, I want you to know that we have a very strong credit union system. Very proud of the fact that their capital is higher than it's been since the recession of over, I guess, 15 years ago. So
just to interject there, I'm curious on that point, because that was one of the points I'm kind of was, if you look at, what do you think makes the credit unions sort of uniquely positioned? You talked about the health is really strong, where I think in the regional, we've kind of had a mini regional bank crisis. It wasn't just SVB. We did have some trouble with a couple of other lenders, like banks like Signature and First Republic, and we hope they're not others, but there could be others. What do you think that makes the credit unions better equipped, as you say, they're quite healthy to
That's a really good question. I think it goes back all to their model. I mean, again, they grew out of adversity, and they also grew out of my mic falling out of my pocket. But anyway, as long as it doesn't hit the ground. Credit unions, you all know, are member-based. When you join a credit union, that means that you're putting in that $5, and that means that you get to have an ownership stake. That means that they are not-for-profit, democratically controlled, that's little d, controlled institutions. So that moment you join a credit union, you're able to vote on its governance. You're able to get lower rates on your mortgage and auto loans because credit unions share their profits and their savings with you. The thing that makes them unique is that they've always been about service as opposed to the transaction. They've always been about building the relationship. And I think credit unions, by their nature of growing out of adversity, they've always been tethered to that. How do we help the members succeed? I know you heard from Manalo earlier when talking about financial health. Credit unions have always been able to be that port in the storm. So Aubrey, I think that's why they tend to be very successful, because of that member-based model.
Okay.
And also, frankly, they're not doing a lot of the things that some of the larger banks are doing. That means they may not be doing a lot of some of the trades, some of the derivatives, some of the larger ones with complexity can do so, but I think they tend to stay within their lanes.
So actually, it's a good sort of segue. So I would say there's a lot of probably some of the riskier pieces that the banks typically participate in that you haven't. But one of the reasons we kind of got engaged around Thanksgiving was, hey, you were also looking for them to get engaged a little more around fintech, where in the past maybe banks were earlier to get engaged with fintechs. And I think you see an opportunity. I guess part of my view is, as a regulator, I find it fascinating your willingness and actually championing the fact that, hey, credit unions should start to go work with fintechs. Can you maybe talk a little bit about that? Because I think a lot of us might think, wow, that's, why do you have such a strong conviction around that? That's
a really good question, you all. And it is somewhat counterintuitive for someone from Washington to come and say, hey, I want innovation. I want you all to look outside the box and really bring value to our members. I have taken the view that fintech, you all, is integral to the lifeblood and ongoing success of credit unions. When I talk about those 135 million members, you all, they want to be served. The previous speaker talked about remote deposit capture and things of that nature, where you all, members of credit unions today, they want to use things, whether it be Apple Pay, they want to use faster payments, they want to use some of the other things, whether it be digital assets. So I recognize that if we do not find opportunities for credit unions to partner with some of the groups that, like you all that were here, and I was really impressed with yesterday's presentations. Almost all of you are doing things that I hope that our 4,800 credit unions can use to some degree, because it gives them an opportunity to scale, it gives them an opportunity to serve their members. When I mentioned those 4,800 credit unions, Aubrey, one of those credit unions is a $300,000 credit union in the basement of a church that's only open from 10 to 6 on Sundays. Contrast that with the largest credit union in the world, that's $140 billion. So they're operating in all asset sizes. But with that being said, no matter how small or large they are, they still need tools that you all are providing. And I want to make sure that we at NCUA, as safety and soundness regulators, that we are giving you all and our credit unions guidance on how they should work with you, how we want them to have partnership opportunities. if we don't make those types of investments, and if I, as a prudential safety and soundness regulator, do not pave the way forward for the credit unions, Aubrey,
Yep.
it means that those 135 million members may just disappear, and then for that sake, do I even have an industry to regulate? So I'm not meaning to be alarmist, as you mentioned, I am Mr. Glass half full, but just reality will set in if we do not keep up with the pace of technology that the members are demanding in today's dynamic marketplace.
So around that, I know that you actually have launched something that I'd like for you to tell the audience a little bit about, because I think it's not like you just want to go to conferences like this and champion it. I think you're also putting some actions in place to go back and make that happen. Can you talk a little bit about that new office you've launched?
Yeah, that's a good question. Yes. So it's not just enough to come here and like, hey, you all, I'm excited about you, loved your presentation, give you a rounding applause, and maybe give you a few likes on LinkedIn, and then just go to the next conference. You all know, I think it's so important that I, given the platform that I have, to have demonstrable action. So I want to match my enthusiasm with demonstrable action steps. And one such way of doing that, you all, from the moment I returned to the National Credit Union Administration, I was there about 15 years ago as vice chair, and then I came back in 2019 as chair. I've always believed that technology was important, but what do we do about it? I'm not telling you anything you don't know. Government regulators, and in fact, Washington, you don't expect us to lead. You expect us to maybe keep up. There are so many things that you all are doing in fintechs that we're just going to have to do our level best to make sure we understand, and how do we regulate from a safety and soundness perspective. I have created with my fellow board and senior leaders, you all, a new Office of Innovation. NCUA, the National Credit Union Administration, has a new Office of Financial Technology and Access. We launched it. I've been recruiting for someone for 3 years. It took that long, but we now have this person. And what are we going to be doing with our new office? It is going to be an opportunity for us to reach out directly to fintechs, similar to all of you that are here today. It's going to be a chance for us to understand, how does that fintech work with a credit union, and how do we ensure that there is a fidelity to consumer protection and consumer compliance? But in hiring the new person that we have for it, his name is Charles Vice, V-I-C-E. He comes to us by way of Kentucky, where he served as the head of banking and supervision there for the Commonwealth for banks and credit unions. And I was very deliberate about hiring the right person, you all. I had a number of folks who wanted to come and be my head of innovation, but they wanted to stifle creativity. So I think that would send you all a mixed message if I'm encouraging you to go forward, but yet be slow about it. So this is someone that is really going to be able to provide regulatory clarity and guidance. What are some things, Aubrey? I know we talked about this last night. I don't just want him to be an external relations person, but I want him to come back to me and the board with what are things that we need to do around addressing regulatory impediments. Many of you had products that you were discussing on yesterday. Well, what he's going to do is maybe help me have a regulatory sandbox. I think that's a term that you all are familiar with. It emanated from our counterparts in the UK, where they will work, they being the Bank of England and the Financial Conduct Authority, working with fintechs. As you're beginning to scale and perfect your models, it gives you all an opportunity to work under the aegis of the regulator to work out regulatory impediments. You are able to see what can be some of those things regarding fair lending, fair housing that could be a violation. So it's better to work in that controlled environment with a safe harbor, such that when you are ready to go public, you're not going to worry about an enforcement action or a fine or a penalty. So I've tasked Charles Vice with looking at opportunities, maybe with some of you to do a sandbox of an activity. Another area, you all, is looking at a tech sprint. How do we work with some of you all to bring maybe a few of you together in Washington for maybe a few days and say, hey, this is an issue. Can you put your thought leadership into action and give us some things that we can do? And I want to do that around Bank Secrecy Act, knowing your customer. Saw a number of really impressive presentations on yesterday. And if I would advise you all on anything, I hope some of you are looking at the KYC, looking at anti-money laundering and those types of activities, because those are some of the things that I'd like to do a tech sprint around. Another thing that we're looking to do is a Shark Tank. I know you and I are going to talk a little bit about access in a bit, so I won't steal your thunder, Aubrey. I never want to steal thunder. But with that being said, I want to bring venture capital funders that are supporting fintechs and credit unions together to have a Shark Tank around some different issues, whether it be payments, whether it be digital identities and all those types of things. So it's really bright, ambitious for what we're doing with the new office. And by the way, we're continuing to hire. Now that it's taken me 3 years to find the right person, we're now able to now look for deputies and other folks. Again, maybe I think I see a lot of RegTech. Oh, there you are. It's so good to see all of you from RegTech that are here, Ashley. And I'd love that you could have Charles Weiss come and maybe do office hours and do things like that. So
We'll take you up on that. So
Please
I
do.
think, believe me, everyone here that has anything was like going, we're going to take you up on that.
please
Rodney.
do.
So I'm curious. So it's great you've got them in place. I think you talked a little bit about sort of KYC onboarding. We talked a little bit about financial inclusion, which was one of the ideas. I thought it was interesting that we didn't know that the prior session they were going to talk a little bit about financial inclusion in credit unions. So
Exactly.
I mean, can you maybe more elaborate around that area? Do you see kind of an opportunity for fintech and financial inclusion with the credit unions?
Oh my goodness, if there's any opportunity for fintech, and that is definitely working with our credit unions around financial inclusion. I have been saying this for many years, and I think given some of the intractable issues, again, that we saw play out during the George Floyd tragedy, I wrote an op-ed in the Wall Street Journal where I talked about the need for banks and credit unions to come together to help American cities heal. And I talked about the need for broader and greater financial inclusion. I mentioned you all in the article, and I will mention it to you today, this morning. Financial inclusion is the civil rights issue of our generation. I say that it's a civil rights issue because without having an opportunity to have access to mainstream financial products, again, similar to our antecedents and similar to the folks who started credit unions 100 years ago, if we do not give folks access, it makes them have to run to predatory and pernicious payday lenders. So we want to prevent that. In addition to that, you all, when I talk about financial inclusion for civil rights as an issue, without an appropriate credit score, you cannot live in the neighborhood where you wish to live. That's either to rent an apartment or to purchase a home. That determines where you get to educate your children. Without an appropriate credit score, it also determines if you get to have a car that you need to go to and from work. And most importantly, in some instances to date, if you do not have an appropriate credit score, or even a credit score at all, in fact, there are 26 million folks with what we call credit invisible, meaning they have no score whatsoever, it determines if you can get a job. So it's hard to have financial inclusion if you cannot have gainful employment. So that's why when I am talking about financial inclusion as an issue of civil rights proportions, it's because of those three facts that I've just given you. Because of the ability that you all in the fintech world have to really get to folks nimbly and with great alacrity, I think that is how you all can help our credit unions reach those folks who could not access $400. Do any of you know the latest data point from the FDIC? Roughly 40% of American households are unable to obtain $400 in the event of a family emergency. If we overlay that with a community of color, so that means if you are from a community of color and you need access to $400, 60% chance that you would not be able to obtain it. Continue with my overlays. Now just put that with people with disabilities. That means that 80% for those individuals. So if you are a community of color with a disability, 80% likelihood that you could not obtain $400. I want credit unions to partner with groups such as all of yours to help bridge that divide. And also, it comes back to financial health. Aubrey, one of the things that we're seeing with financial inclusion is that credit unions are making those small dollar loans. I've already mentioned that because credit unions are tax exempt, it means that they can pass on those savings, but they're also doing financial coaching, financial counseling. That is so important. So with our new Office of Innovation that I mentioned that we've created, I also put financial innovation and access. And there was, you all, a lot of intentionality that goes with that. We're not just innovating because that's what all the cool, glamorous people like you all are doing. You all are innovating, but I'm wanting us to innovate to bolster broader financial access. So Charles Weiss, we've mentioned. We've also had another person that's joining him who's working on access, and that's an initiative that I work with our board to create. It stands for Advancing Communities Through Credit, Education, Stability, and Support. So this is the person that's going to be partnering with fintechs and Mr. Weiss to go to events such as this to see who's working on an app that's going to maybe help people match their savings. You know, there are a number of foundations that are helping low to moderate income communities match their savings to encourage more savings. So maybe there is an app that can help us be better and deliberate with that. So looking to marry those two together, and we're really excited.
So that's, I mean, it's you know, I've had the pleasure of working with one of your credit union members over for the past 2 years that's looking at modernizing. And when you understand the business practices that they do and how much they support their members, in contrast to some of the banks, there's a lot of things that credit unions will bend over backwards for, honoring rates or, you know, backdating something because someone, and it just is
Well, they're not backdating. If they're doing that, that may be an issue that I'm not
well, okay, well,
so.
maybe I didn't say that. So I have a question for you. It's like, if you look at the fintechs that have been here, how do they, you know, is it working with your new innovation office? How is the best way for them to maximize, I guess, how they collaborate not only with the regulatory bodies but with all the credit union agencies that you provide oversight for? Can you give us a little? How would you navigate that?
There are a number of opportunities, or what you're asking me essentially, Aubrey, what's the point of entry for any of the individuals here to work with us? Number of points of entry. One such is with Charles Weiss from that Office of Innovation, because as he comes to events such as this, or as I come to events such as this, he's going to be wanting to hear from you. What are you working on? And one of the things, you all, before we even hired Charles, I created a FinTech discussion series. So every other week, I am bringing a different FinTech to our agency to talk to our heads of risk, to talk to the general counsel, our examiners. And why am I doing that? It's because I want our agency to understand what you're working on so that they can have a better familiarity when that credit union that you may have referenced has one of you all there as a partner, because we want to look at who's in the supply chain. So continuing the dialogue is one piece. So Charles Weiss, or even reaching out to me at rhood@ncua.gov is another area. But also, you all getting to know the credit unions themselves. As you are building out partnerships, I hope that you're reaching out to some of those local credit unions there. I know there's a wide swath of you from throughout the country, but get to know them locally. They all have leagues or associations. That's one such way you can meet them. Another thing, you all, because credit unions are so investing in technology and groups such as yours, did you all know that there's almost $800 million that's been somewhat available to, not somewhat, but it's been definitely available to fintechs working with credit unions? One such fund is Circle, that's CURQL, and another group is called True Stage Investors. They used to be CUNA Mutual. What are they doing? They're investing in stage A, B, even early stage to some degree, especially with minority entrepreneurs. They're finding opportunities to invest directly in fintechs that are serving the credit union. So they really would want you to have at least one credit union before they speak with you, but you all, they do conferences where you can come to an event with some of those groups. One such event that's about to take place later this year is Venture Tech.
Okay.
Venture Tech will be an opportunity for you to come and have a booth and showcase your wares. So I've mentioned Venture Tech, if you're going to Google that. I've mentioned Circle, I've mentioned True Stage, I've mentioned our agency, and also reaching out to some of the credit unions themselves. Another such event is CUNA, that's the Credit Union National Association. They will do a huge convening, Aubrey, of credit unions next February in Washington, D.C., where you're going to have nearly 7,000 participants, all from the credit union ecosystem, coming together. So that would be an opportunity for you to either have a booth, and again, just plethora of options for you all to have that point of entry. But let me maybe speak about one matter. As you're working with credit unions, do recognize that credit unions are not just banks that operate under a different name. Aubrey, you've gotten into this. It's about the relationship aspect versus the transaction. It's about that level of support, that level of consumer engagement. In our parlance, we refer to them as members and not customers. So as you all as fintech seek to build out your model and platform, just bear in mind that you are dealing with mission-centrist, purpose-driven institutions when you're working with a credit union. And I think the one thing that resonates well with me and our entities that we regulate is that they are purpose-driven like you all are. So I think that that really bodes well for you when you're giving your value prop and when you're talking about how you want to enhance member value. So I just want you to know, there is that differentiating factor. It's about service and about really going the extra mile, which I'm sure all of you do that. But again, they're not banks by a different name. But I think I've given you Aubrey more than enough.
Now I'm going to switch not to kind of our prepared sort of discussion remarks. We've gotten a few questions from the audience.
Oh, good.
That I think that I'd like for you to kind of go back and talk to. I'm actually going to start with the most recent one that came in because I think it helps illustrate this last point. So what's the biggest obstacle that will prevent credit unions from achieving your vision of adapting innovative solutions to meet the needs of its members? What needs to happen and what isn't happening today? That's
a really good question. It's a lot to unpack there. I think the biggest issue you all are facing are credit unions and perhaps their inability to just run with alacrity to support fintechs. I think it's because of regulatory uncertainty. I think because you hear a number of the regulators, and we're not the only regulator that touches the financial services arena. I mean, you think our $2.2 trillion, why that's sizable, the FDIC and the Federal Reserve are looking at $220 trillion collectively. So I think the main thing, Aubrey, it goes back to the first question. You guys have never had a financial regulator here. You don't hear a lot of people like me in Washington going around preaching innovation. Quite conversely, they want to stifle creativity. I'm like, no, we don't have an industry without it. So I think we in Washington as financial regulators are going to need to really be consistent and giving you the regulatory clarity and guidance that you all need to succeed and to serve your members, or in our case, our customers if you're working with banks. And I think you need to hear more consistency from us. So credit unions now that after 3 years, they've heard me talk about this from the platform that I have, Aubrey.
Yep.
They are now recognizing that with Charles Weiss, he is there to create this new entity. We've hired Natasha McAdoo, who's running Access. And you all, I'm not going to be flippant when I say this, but in government, as you know, once you get a government role, they never go away. So Charles is going to be there forever. So I can just tell you that. So with that being said, that level of permanence means that you're going to continue. Well, no, it wasn't that bad of a
No, I'm laughing just because it's a breath of fresh air.
I thought I heard something from on high. It's like a big thunder. But so you all, I think the more that they hear from us at NCUA, the better. I think the more that the rhetoric is not just rhetoric, but it's met with demonstrable action. Again, having those people, those foot soldiers, coming to see you all. I think also when we are starting to eradicate some of the barriers, so it means that we're getting rid of some of the regulatory entanglement areas and things like that. I think the more 1 or 2 credit unions see that action, which they are. In fact, we do have about 1,000 credit union fintech sort of partnerships as it is. So I think just the more they see success, it begets more success. But right now, we as regulators need to do it consistently, because otherwise it could send a mixed message.
So I'm going to go back to a prior dialogue we were having, which was around financial inclusion. So we had another question from the audience, which is what are kind of some specific initiatives around that are happening for financial education for really more of the underserved communities through high schools and colleges? Is there stuff doing? It sounds like this might have been it's not a plant, because I know you sent the question, but I think it's clearly something I know you have a passion for.
Well, you saw my face light up at the moment that question, when you uttered it. More needs to be done around getting our high school students and college students engaged. And the reason, as he was reading the question, my face lit up or my smile was wider, because credit unions are building credit unions in high schools. That means that I was just recently in Louisville, Kentucky, and I was able to go to the A1 credit union that was in the lobby of a high school. So that means that you have 9th, 10th, 11th, and 12th grade students learning about KYC, learning about Bank Secrecy Act, but at the same time teaching those credit union members. Oh yes, they were learning about all those things, but they are also learning about financial health and well-being. Some of the credit union members of the high school are teaching their parents about budgeting, teaching them about how do you differentiate a credit card from a debit card. So that is some of the things that credit unions are doing as a part of their mission. Again, it goes back to people helping people. You all, just a few months ago, I even went to an elementary school in Lincoln, Nebraska. 5th graders had a credit union there. I was there with them on that Wednesday where they were all putting in their $5 and $6 allowances. And yes, it may have been 10 below zero that day, but it was so warm in the sense that I was able to see a bright future for these youngsters learning about financial literacy and health and well-being. One of the things, you all, that I think we can continue to do to foster greater financial education, you all, making it mandatory at the high schools or maybe even some of the colleges for folks before you graduate. Let's make sure that in addition to learning about chemistry and physics, that you also understand about financial health and well-being. Helping those students understand that, yes, you may want to go out and get that credit card to buy whatever the fancy shoes are of the day, but recognize that they may be paying for those shoes for 10, 15 years. So how do you help people to differentiate between a need and a want? So I love the fact that many states now are making it mandatory to have graduation requirements based around financial literacy and whatnot. So those are some of the things that are thinking that are helping promote financial education. Also, credit unions, you all, many of them are serving, we're putting branches in minority communities and underserved communities. I take a very expansive view about diversity, equity, and inclusion. So credit unions are going where the needs are most pronounced. So that means that they're going neck to neck in those communities that have payday lenders, so they can say, hey, we're that viable option. So, and with those options comes a lot of education. So,
okay, so I've got one last question for you because we're just about out of time.
The time is going that quickly. Where did the time go?
It's been awesome. This is one that it probably gets back to your innovation office, but the federal regulators, I guess, have released third-party guidance around vendors, and I get the comment here was the NCUA was not included, if that's correct.
That is correct.
I guess, and if that's true, then I guess what is the NCUA doing or thinking about how they manage vendor authority to drive that? Can you make a comment on? I guess that's probably from some of our service providers are saying, hey, give me, what's your guidance there?
Yes, so what's the guidance there, you all? Yes, the FDIC, the Federal Reserve, and the Office of the Comptroller of Currency, that's the regulator for the Wall Street banks, whether it be my old employer, JP Morgan, or Goldman. Those three regulators, you all, have issued guidance to their regulated entities about how do you partner with third parties such as you all. You would be considered a third party. And we did not work with them on that particular guidance because we have our own guidance around third party and due diligence and working with vendors. One of the things, you all, if you want to go back and look at that guidance, it was just released 2 weeks ago, and the FDIC, it's on their website. It's telling the vendors like all of you, how do you vet your credit unions, or how do you vet the banks? How do you go about doing a cybersecurity assessment? How do you go about looking at data privacy and things of those types of issues? Really important things, you all, but when I mentioned that $300,000 credit union in the basement of a church, is that credit union going to be able to do that level of vendor assessment? So it was a very prescriptive sort of tool that came out. In fact, we've already heard of one Federal Reserve governor that has said that she is against that third-party due diligence guidance that came out because it treats everyone with the same broad brush. So we at NCUA, thankfully, were not a part of that letter or that guidance. And you know, what we as examiners and regulators do, we sometimes would not do a rulemaking that's something that comes with an enforcement or the blunt instrument of an enforcement tool. We sometimes give what we call supervisory guidance, where it's saying, hey, these are the best practices, these are the principles that you need to deploy in order to still maintain safety and soundness. So NCUA, I have shared this with some of our colleagues, so we will be coming with our own level of third-party due diligence tools and things like that. But the thing that the bank regulators did not do, they say, hey, this is what we want you to do, but they didn't give you a roadmap on how to get there. Typically, when we do such rules and pronouncements or even guidance, we tell you examples. We also do our own trainings and things like that. So that is one of the reasons why one of the Federal Reserve governors dissented against that particular thing, because it didn't give guidance. So for us, NCUA will be looking to provide guidance, clarity around third parties, but you all don't need to wait for that because we still have had a guidance letter that's been out for about a decade now. So for right now, we want all of our credit unions to vet you. Does that mean they're looking at your balance sheets, but they're also, and by the way, sidebar, when we look at traditional third-party service providers, you know, those are more traditional companies where you can look at a cash flow and EBITDA and things of that nature. Your models are so radically different from other traditional entities, so I want you to know that we are also training our folks that when they look at you, you may not want to look at EBITDA, but you want to look at other things such as capture, share, and things of that nature. So we're having to really look at that. So I hope that whatever guidance that we do bring out will let you all know that we're not grouping you all in the same model. So guidance to come out soon. We, until then though, not want you to feel that you need to sort of maintaining like, okay, what are we going to do? work, build the relationships. I've given you options, and the main thing is just for you to know that I really don't think that we have a strong credit union system without the support of fintechs.
Listen, thank you, Rodney. I love your positivity, your great outlook for the regulatory body that manages credit unions, the vision for credit unions. I think credit unions are an immensely important part of the fabric of our overall financial services ecosystem. Thank you so much for coming back to Charlotte and sharing your wisdom and advice. It's really been delightful. So let's give Rodney a big round of applause.
Thank you.
Thank you. I appreciate it. Well, now, listen, that's perfect. We're done, so it can fall out.
That was not a drop.
Ladies and gentlemen, please get ready for our next presentation, Fraud and FinTech, Mitigating Risks and Strengthening Security in the Digital Age.